Hello, hello. Welcome back, everyone. Happy Sunday. Let me get audio check here on my end, and we'll get right into it. All right, audio's coming through clear on my end. Hope you guys can see everything. You guys should be able to see the dollar monthly chart. And all right, so I have to. All right, guys, should be good to go now. Let me double check here on my end. Sometimes OBS giving me trouble. All right, guys, should be good to go. All right, appreciate you guys' patience. Hopefully, we don't run into any issues again with the OBS software. Silver Bullet Trader, hello, hello. Joel, happy Sunday. Glad to be here, guys. Eslam, welcome in. Welcome in, my man. Jeff, happy Sunday, brother. Glad to have you. Omar, hi, thanks again for the spot-on analysis. Appreciate you, my man. Thank you very much. Yannick, hello, hello. Mr. Nuller, happy to have you guys. Kevin, my man, happy Sunday. All right, guys, so let's go ahead and get into the business here today, what it is that we are looking for. So before we get into the charts today, I want to give you guys context as to the week we're going into, which is non-farm payroll week, right? So when it is non-farm payroll week, I know for those of you guys that have been here for a while, you guys know my protocol. It's very consistent in what I'm looking to do on these particular weeks. My goal with these weeks is to get paid Monday, Tuesday. Once I get what I'm looking for, I'm very comfortable the rest of the week. A little bit of background behind those protocols I've developed is when I was first developing as a trader, I would push really hard in these weeks. It's the first week of the month, market's open, I'm taking all sorts of trades. And then what I realized looking back on my data is that these particular weeks were extremely problematic, specifically Wednesday and Thursday. And then what I would notice is I would start the week in deep drawdown. Start the month in deep drawdown in the first week of the month. So what I do now is I trade the cleanest days, which is Monday, Tuesday, get what I'm looking for, and start the week start the month on a high note with what I'm looking for early in the week. Because as you'll see, if you've studied non-farm payroll price action, you'll see Wednesday, Thursday particularly difficult. You can trade NFP Friday if you know what you're doing, but that's the key. You have to know what you're doing. So those are generally the 3 days that I'm looking to trade on non-farm payroll. So with that being said, let's go get into what we're looking for here with dollar, bonds, and then we'll get into indices. And then any questions you guys have, I'll be sure to take as many of those as I can. Hey, Brand. Hey, brother. Great week ahead. Absolutely. Absolutely. All right. So monthly chart. Let me get this line off here. So last week, we were looking for the market to trade down into this monthly fair value gap, but we ended up seeing the market drop and start to reject to the upside. What level I'm watching now and that I was monitoring throughout the week is this last up close candle or this bullish breaker block. So seeing how the market traded down into it, I thought it'd be reasonable for them to want to stab down into that monthly fair value gap, but the market is stopping at the high of that monthly bullish breaker. So watching the bullish breaker here, I want to see how we trade there going forward. If we start to reject away from that, then my attention not sure why there's a delay. What's going on here? All right. So my attention will go to the buy side here and then eventually these highs if we reject strongly away from this bullish breaker. Dropping down into the weekly time frame, we have this down close candle here with a fair value gap and a market structure shift, high probability order block. I was watching how we traded in this key level here last week. Style extend right. And then what you'll notice is the body stayed in the upper half. So I wanted to see last week, do we start to show acceleration down through that to get into this swing low here? But we ended up seeing the bodies respecting that and strength on the upside. So the fact that we're staying above 50% of this order block here takes my attention into this wick here, midpoint of this wick. And then through that, we have the buy side here. Working down into the daily chart. So here we have that monthly breaker. I'm going to take that off. And then we have these two down close candles here. The reason I'm using the two down close candles is because you go to a 2-day chart, you'll see that is just one consecutive bullish order block. So looking at the daily chart, we have 2 consecutive down close candles, extend that through. I wanted to see how we traded there last week, right? Do we start to show acceleration down through that, making a run for the sell side? But in fact, we saw the market trade through this low and then start to reject strongly. So as of right now, I am treating this as a bullish market structure shift. What's going to confirm that for me is how we trade inside this daily fair value gap. Meaning, do we get above this gap? Meaning, do we get above this gap, use it as support, stay in the upper half? Then that would give a clean price run into this high here, wick, midpoint, and then these relatively equal highs here. But we do have to hold this fair value gap, meaning we get above it, use it as support. How we trade inside this fair value gap will be really helpful for me to measure the directional bias for the month of March. So let's say, for example, this isn't a shift in market structure. It's just a stop run and we reject strongly outside of this gap. Then, of course, that would change what I'm looking for. And then I would look for lower prices. So it's just about letting the market reveal its hand. Because it is non-farm payroll week, many times I am more patient. I do keep the cards closer to my vest because I want to see what they do with NFP. And then generally that gives me more insight for the remainder of the month. So what I am watching is, again, this fair value gap here. As of right now, just showing you guys what I'm looking at right now, I do see this as a shift in market structure. But again, that will be confirmed with how we trade inside this gap. As of right now, with what I'm seeing currently, I am expecting this to be an inversion gap, get above it, support, and then launch higher into these premium targets above market price. Dropping into the 4-hour, see the market spending time inside that bullish order block, and then we got a nice displacement away from it, right? So nice displacement with the fair value gap trading above this key intermediate term high. So I'm looking at this as a market structure break here on the lower time frame. And then again, I want to see how we trade inside this daily fair value gap for confirmation that we're going to reprice into this buy side here, and then these relatively equal highs up here. Screen is frozen. Man, it keeps doing that on me. I don't know what's going on. All right, let me restart it. Alrighty, guys. So should be good now. All right. Apologize for that. I have no idea what's going on. I'm gonna need to have a talk with the person that's in charge of our social media to get this shit together. Should be good now. We're still getting ads. Strat King, my man, you're the only one that's saying that, brother. I just get off the cheap seat and pay for YouTube Premium. I'm not sure why it's showing ads. I don't see anyone else getting ads, but if it is, then I'll look to get that fixed. OBS trolls a lot. Yeah, absolutely. Absolutely. Sorry, guys. I'm going to just pick it back up from the daily chart because I'm not sure where it froze on the daily. So I'll go from the daily and then drop down into the 4-hour. All right. So going back to the daily chart here, I think should be good. Yeah. All right. So daily chart, again, bullish order block. In summary, as of right now, I'm treating this as a shift in market structure. Want to see how we trade inside this daily inversion fair value gap. So ideally, like I said, we'll get above it, use it as support, and then trade higher into these premium levels here. Appreciate you guys letting me know that it's frozen. Thank you very much. All right, 4-hour chart. So we see market spending time inside that daily bullish order block here. And then what I wanted to see is how we traded away from that. Market that aggressively displaces higher, creating a fair value gap and trading through this intermediate term high. So as of right now on the 4-hour chart, I am looking at this as a market structure break, meaning we're going to see a new extended price leg to the upside after breaking structure. But again, I want to see how we trade inside that daily fair value gap to confirm it, right? So buy stops here, and then we have these relatively equal highs. Ideally, we'll leave some of this fair value gap open as well. If we leave that open, then I expect we'll see a nice clean price leg into the buy stops. So one of the other things that I wanted to touch on, and what actually makes it interesting here this week, is we have bonds rallying with dollar, right? So very interesting dynamic here. Usually we look for these to be the inverse of each other, right? Dollar higher, treasury bonds lower. But in fact, we're seeing treasury bonds trading higher, right? So weekly chart, bullish, also with a bullish weekly candle for the US dollar as well. So what I'll be looking for here is buy side, and we can see these markets decoupled in the short term. So right now I'm trading what the market's giving me, which is we saw a nice strong close here above this weekly fair value gap, indicating that we're likely going to run into these buy stops here. And then once we get there, then I'll have to reassess, which is why I'll have more clarity as to what we'll look at for the entire month of March in terms of a directional bias for the month once we get through the non-farm payroll Friday news release. Looking at the daily chart here, zoom into it here. Again, we were talking about the SMT at the lows here last week, and then aggressive displacement higher, breakaway gaps, market quickly running. So again, in my mind, we're likely going to trade up into the highs. So we can see bullish dollar and bullish bonds. One of them will give over time though. So I'm going to use that insight once we get it to then have more of a longer term directional clarity on these assets. So that's what I'm looking at for bonds, dollar. And for those of you guys that are trading foreign currency, it's just going to be the opposite, right? So if you're looking at euro and pound, then you're just going to look for the opposite of what we're looking at in the US dollar. So that would mean sell models on pound and euro. All right, so looking at the weekly chart here, a really nice delivery last week. Let me get these levels off here. These should be on the daily chart. All right, so last week we called the repricing here into these relatively equal lows. Now that we've delivered that huge run to the downside, I think that was over what? Man, frozen again. What the fuck is going on? All right, so screen froze again. If it freezes one more time on me, what I'm going to go ahead and do is I'll probably just cut the live, do a pre-recorded video, and send it to you guys if it gives me a problem. But looks like we should be able to power on through. Not sure why this is happening. Like I said, I'm going to have to get this resolved. All right, so weekly chart. Weekly chart here, we have the relatively equal lows here. And then again, looking at that repricing last week that we expected, and that was over what? Yeah, so over 1,000 handles. So huge drop last week that we saw. Relatively equal lows traded down into. And then a strong close. Yeah, I'm not sure why this thing's giving me problems. I think it's freezing up again. All right, ship again. All right, so the relatively equal lows traded to and through. So where I'm at right now, and you guys will see this in the daily chart, because we've already dropped a lot, it's reasonable for the market to retrace. And I'll touch and go into why I'm looking at that. So looking at the daily chart here now, again, nice repricing into these lows. If you guys recall last week, it was even better that they left this fair value gap open because now we can treat that as a breakaway gap and see an aggressive run down into these relatively equal lows. So what my attention goes to here this week is we now have a range. I'll have to see how Monday trades to confirm that it is a dealing range, but we have equilibrium here. So between this high, this low, targets reached. And now if we create a swing low here, then we could see the market trade up into equilibrium of this price leg. So now that we've reached several targets on the downside, it's reasonable for the market to retrace to a short-term premium. And then there's also these equal highs here that you'll see on the hourly time frame. That'll be important. So looking at this daily fair value gap here, that's what I'll be watching going into Monday. If we get above it, show strength, then that immediately takes my attention to this daily fair value gap here and equilibrium of the price leg that we're looking at, right? So it's reasonable to see the market retrace after such an extended move lower. If we see the market fail to get above this daily fair value gap here and we remain below this up close and we start to show bearish market structure in the lower time frame, then we could continue accelerating much further to the downside. So that's what I'm going to have to weigh out here in the first few days of trading. And again, because it is NFP week, I generally don't rely as much on a daily and weekly bias. I'm much more focused on the lower time frames and just intraday scalping, more specifically on these weeks. So that's also some insight as to how I'm framing price runs in this week, more so surgical strikes, looking at intraday price action. But to give you guys what I'm looking at on the higher time frame, this is what I'm weighing out. Hourly chart, we have the daily fair value gap here. So again, like I said, I need to see how we trade there. If we start to show strength getting through it, then my attention immediately goes to these equal highs here and these equal highs here. Why these highs? Because what did we do last week? Huge run to the downside. So where's the trailed buy stops going to be? On Friday, they were right here. And then now there's a larger liquidity pool here. But the way I'm going to confirm that we're going to get up into those levels is if we get above the daily fair value gap here, stay above it, and then rally into these equal highs. Then once we get to this fair value gap here, I'll have to see how we trade, right? Because longer term, if we're going to be bearish, and they take it up into a premium, then that would create a nice price leg to the downside. However, if we start to show speed through these levels here, then that could change the bias, and the market may want to trade up into these relatively equal highs here, right? But that's looking a few weeks ahead right now, looking for a retracement to premium, but I have to confirm it with this daily fair value gap here. And the same thing's going to go for S&P. Looking at ES took out sell stops, did not take out this low like NASDAQ did, and then look at all these clean highs here. So that'd be interesting to see if they want to take it up there, but right now just taking it step by step, just looking for a short-term premium for right now, right? And that's more than enough to capitalize on NFP week. And then on the other side of NFP week, when we're here the following Sunday, I'll hopefully have more clarity to be able to give you guys more longer term price targets, kind of like you guys had last week. So with that in mind, hopefully the screen doesn't freeze up on me anymore, and I'll take a few questions here before we get going. Do you guys have anything for me? And you know what? I do want to give you guys an update on crude oil. I've been talking about crude oil to you guys. So bias has been bearish on crude, but one of the reasons why we're seeing what we predicted here, which is a high resistance liquidity run, is because of, again, we're trading through a balanced price range here. So again, the bias is still bearish. I still see these equal lows here as the draw for CL. However, the fact that we're trading through this balanced price range here, oh shit, frozen again. All right, we should be back. All right, so as I was saying on crude oil here, the bias is still bearish, looking for these relatively equal lows here. However, because we're trading through all this consolidation back and forth price action, it's delivering again as we anticipated, which is a high resistance liquidity run, which is just a lot more back and forth and deep retracements. Still delivering the targets, right? Still seeing bearish order flow in here, just taking a lot longer to deliver through all this price action that we're seeing here. Can you take a look at ES? So ES is going to be the same as NASDAQ. One thing that is important to note is that S&P did not take out this low here. So S&P is a bit stronger than the NASDAQ. So if looking to go long this week, ES may be the stronger asset. Can you take a look at SOL, USDT? Yeah, let's go take it. So watch this fair value gap here for SOL. Right now we're seeing a nice bounce on the cryptocurrency after being traded down into a deep discount. So let's look at the daily chart. So yeah, as long as you remain above this fair value gap, what you'll want to watch for Solana is, do we stay in the upper half of this gap here, right? So the market can retrace, treat it as an inversion gap, and then stay. All right, everything's still good. And then stay in the upper half here. As long as we stay in the upper half, looking for higher prices on Solana. And then what you can do is measure this range high, range low. Low-hanging fruit would be the equilibrium here and the buy stops here and here. And then from there, see what signatures the market gives you as we trade into a premium. And then from there, you'll be able to have insight for the subsequent price leg. Take a look at pound euro. Yeah, let's go and take a look at pound. All right, so interesting to note also an S&T divergence here, a euro not taking out this high, whereas the US dollar took out this low. So we also have an S&T divergence further confirming what it is that we're looking for. So for euro, I'm seeing this as a market structure shift to the downside. Target would be this sell side here, and then take this wick, split it in half. That'll give you about this low here. And then through that, we have the relatively equal lows. And that's what I'm looking at for euro. Pound, looking for the same things. Small fair value gap there will be ideal if it's left open. And then we can see a nice price run to this daily fair value gap here as first target. And then if we accelerate through that, we have this swing low, wick 50%, this low here, and then sell side down here if we see strength on dollar longer term, which is what I'm expecting. Eslam, everything should be good. I should have been able to get the Solana analysis without the screen freezing, right? Mission impossible here. So yeah, let's take a look at so Solana, Euro, Pound, good to go. German 40, yeah, let's take a look at the German 40. And then that'll probably be the last one here since the screen's giving me some problems. And then for those of you guys that are in the Discord that have any questions, you guys can fire that away in the Discord. So looking at the Eslam, are you using the NFP protocol on CPI and FOMC weeks? No, it's not the same as NFP week now. So I'm a lot more flexible. I trade just about 3 to 4 days out of that week on CPI and FOMC. The day before, you do want to be a little cautious of a major impact news driver, but other than that, it's business as usual for me. So yeah, German 40, trust buy models. Keep looking for higher prices. If we do see a retracement, then study this weekly fair value gap and how we trade there, but we're looking for higher prices in this market that's at all-time highs, seeing breakaway gaps, this thing's screaming higher. In my opinion, there's nothing bearish on this market. So keep trusting buy models. You don't want to keep shorting markets that are trading at all-time highs. Yeah, it was an old message. Already saw your reply. Thanks. Yeah, great question. Thank you. Alessandro, you have just highlighted a premium daily fair value gap on NQ. Don't you think it should be based on the low of the previous down close candle, February 25th? Let me see. Sometimes if I'm annotating the charts quick, I can make a mistake. Let me see. February. All right, just had to restart OBS again. Still giving me problems. So this is going to be the last question I'm going to go ahead and tend to today. So February 25th, fair value gap, don't you think it should be? Yeah, I'm not sure what your question is, my man. Yeah, this is the fair value gap here. This candle's low, this candle's high. That creates the one-sided price delivery, which is known as the fair value gap. Yeah, so that should be... yeah, there's nothing wrong there. I'm not really sure I'm following your question either. What is your take on trading on the Trump markets? I think it brings a lot more volatility. So one of the things that's very helpful is if you know how to read price action, right? Like what it is that we're looking at in the charts. The Trump markets is just bringing more volatility, right? So it's just going to do what it was already going to do, but a lot more violent and a lot faster, right? So for example, as it relates to crypto, we'll go ahead and take a look at that, right? So what do we see on crypto? Let's go up to the weekly chart. We have a range low, range high. Market sunk down into what? Equilibrium of this price leg, right? Or the discount of the dealing range, which creates what? New smart money buying opportunities. And then we're seeing a nice rejection from discount valuation, which is, if you know dealing ranges and how they're used in price action, exactly what you want to see, right? So nice rejection away from discount markets and using Trump's tweets as the smokescreen to do what the markets always do. Premium to discount, inefficiencies here. So internal range liquidity to external. The market's still doing the same things. It's just going to deliver a lot more faster, a lot more violent, because the market makers use Trump sentiment to really move these markets around lightning quick. So I like it. It's great. Markets are a lot faster, a lot more opportunity, which also means you have to be careful, right? Because the market can absolutely rip your face off if you're not cautious with what it is that you're doing. So that's my take on it. And sizing down. Sizing down is a big key, especially with the size of the ranges we're seeing right now. Sizing down is also a big thing that I'm utilizing now, because with half the leverage I used to trade, I can make even more than I was 2 to 3 years ago trading 2 to 3 minis with just 5 to 6 micros, right? And that's just a testament to the major volatility that we're seeing. Jay, do you only trade on Top Step or another prop firm? So currently, Top Step, Apex, I don't do a whole lot with Apex. My team does a lot more with that than I do. But Top Step and Tradeify, the straight to funded accounts, are the two that I personally use. Not recommending them, not pushing anybody to them. As always, do your own research before you put money in any prop firm. And as always, make sure it's not money. Make sure it's money you can afford to lose. Let me just say it like that. So I don't recommend any prop firm in particular, but those are the two that I'm personally using, making money in. So I can just share from my personal experience. Hugo, what does the prop firm mean when one of the rules is a 20% consistency? So it means that, and you can look this up on their website, they should have a more clear explanation. But my understanding of it is let's say you make $10,000 in profit and you have to trade 10 days to make that $10,000. Well, one of the trading days can't exceed 20% of the total profit, meaning you can't have over a $2,000 day and just be up $10,000. So that's my understanding of it in a simple, straightforward way. But the prop firm companies themselves should have guides, tutorials to explain all that to you. But that's the straightforward way of understanding it. RJ, I'd love to hear your thoughts on the NQ yearly fair value gap. Yeah, let me check that out. So 12-month chart. And going to the continuous. Are you referring to this fair value gap here? From 2020? $2024 till now. So I don't see a fair value gap in here. Maybe you're looking at a different time frame, but if I'm looking at the yearly chart, which is the 12-month chart, use the continuous contract because there's not enough data on the current contract to see this, but I don't see any fair value gap there. So I'm not following your question. All right, guys. So that's going to go ahead and do it for me here. I do appreciate you guys joining me. Let me... All right, guys, so I should be live here once more. Should be good to go. All right, so yeah, I'm not seeing any fair value gap here. There is no inefficiency yet. This candle hasn't closed. The fair value gap needs to be a 3-candle pattern. So before we can have a fair value gap here, this candle needs to close. So we still have 9 months until we have that potential fair value gap print. So I'm not seeing anything there, my man. So with that, guys, apologize for all the technical issues. Like I said, I'm gonna have to have a talk with my team, have them get this sorted out. I'm not gonna put up with this anymore. So with that, guys, hope this one was insightful. Hopefully for the next one, we won't have any problems. With that being said, though, appreciate you guys joining us. Appreciate your great questions. And I will see you guys on the next one. And like I said, I may look to do some live trading here this week or just a live tape reading session, depending on if it's Wednesday or Thursday. And as always, it'll be insightful as usual. Appreciate you guys joining us. Have a safe weekend, and I'll see you guys on the next one. Stay safe.